In the realm of personal finance, the concept of interest plays a pivotal role in shaping how individuals manage their money. Whether it's for savings, investments, or borrowing, understanding how interest works is essential. One common question that arises, especially regarding tandem accounts, is whether interest is paid monthly. In this video, we delve into the intricacies of tandem interest, exploring what it is, how it works, and whether it's typically paid out on a monthly basis. What is tandem interest? Tandem interest refers to the interest earned or charged on a tandem account. A tandem account, in financial terms, typically refers to a joint account held by two or more individuals. These accounts are often utilized by couples, business partners, or family members to manage shared finances. Interest on tandem accounts can work in different ways depending on the type of account and the financial institution offering it. In the context of savings or investment accounts, tandem interest usually denotes the interest earned on the combined balance of the account holders. Conversely, in the case of borrowing, it may refer to the interest charged on the collective debt owed by the account holders. How does tandem interest work? The mechanics of tandem interest vary based on whether it's earned or paid. Let's break down each scenario. Tandem interest earned. When it comes to tandem savings or investment accounts, interest is typically earned on the combined balance held in the account. This means that the interest calculation takes into account the total amount contributed by all parties involved. The interest rate, which may be fixed or variable, is applied to this combined balance to determine the interest earned over a specific period. For example, suppose a couple has a tandem savings account with a combined balance of $10,000 and an annual interest rate of 2%. In this case, the interest earned for the year would be $200, $10,000 asterisk 0.02. Tandem interest charged. In the context of borrowing, tandem interest refers to the interest charged on a loan or credit facility held jointly by multiple individuals. Similar to earning interest, the interest rate is applied to the total amount borrowed collectively. This means that all parties are responsible for the repayment of the debt and accrual of interest. For instance, if two partners take out a tandem loan for $20,000 with an annual interest rate of 5%, the interest charged would be calculated based on the total loan amount and distributed equally between the borrowers. Is tandem interest paid monthly? Now, let's address the central question, is tandem interest paid monthly? The answer to this question depends on several factors, including the terms and conditions of the tandem account, the financial institution offering it, and the type of interest involved. Tandem interest on savings or investment accounts. In the case of tandem savings or investment accounts, whether interest is paid monthly varies from one institution to another. Some financial institutions may offer monthly interest payments, while others may opt for quarterly, semi-annual, or annual payouts. Monthly interest payments can provide account holders with more frequent access to their earnings, allowing for better cash flow management and reinvestment opportunities. However, not all institutions may offer this option, and some may prioritize other payout frequencies based on their operational and financial considerations. Tandem interest on borrowing. Similarly, for tandem borrowing arrangements such as joint loans or lines of credit, the frequency of interest payments can vary. Some lenders may require monthly interest payments, while others may allow for quarterly or even annual payments, depending on the terms of the loan agreement. Monthly interest payments on tandem loans can help borrowers manage their cash flow more effectively by spreading out the repayment obligations over smaller intervals. However, it's essential to review the loan agreement carefully to understand the payment schedule and any associated fees or penalties for late or missed payments. Factors influencing tandem interest payment frequency. Several factors may influence whether tandem interest is paid monthly or at other intervals. Financial institution policies. Different banks or credit unions may have varying policies regarding interest payments on tandem accounts. Some may prioritize monthly payouts to attract customers, while others may offer different frequencies based on their business model and customer preferences. Account type. The type of tandem account, whether it's a savings, investment, or borrowing account, can also influence the frequency of interest payments. For example, Savings accounts may be more likely to offer monthly interest payments compared to loans or credit accounts. Interest rate structure. The structure of the interest rate, whether it's fixed or variable, can impact the frequency of payments. Fixed-rate accounts may be more likely to offer monthly payments, as the interest rate remains constant over time, whereas variable-rate accounts may have more flexibility in payment frequency. Regulatory requirements. Regulatory guidelines and consumer protection laws may also play a role in determining the frequency of interest payments. Financial institutions must comply with relevant regulations governing the disclosure and timing of interest payments to ensure transparency and fair treatment of customers. Advantages and disadvantages of monthly interest payments. While monthly interest payments on Tandem accounts can offer several benefits, such as improved cash flow management and quicker access to earnings, they may also have drawbacks. Advantages. Improved cash flow. Monthly interest payments provide account holders with a regular stream of income, which can be beneficial for budgeting and financial planning purposes. Faster compounding. More frequent interest payments allow for faster compounding of earnings, especially in savings or investment accounts, leading to potentially higher overall returns. Flexibility. Monthly payments offer greater flexibility for account holders to reinvest or utilize their earnings according to their financial goals and priorities. Disadvantages. Lower total interest. While monthly payments provide quicker access to earnings, they may result in slightly lower total interest compared to less frequent payout intervals, such as quarterly or annually. Administrative burden. For financial institutions, processing monthly interest payments may entail additional administrative costs and resources, which could potentially impact account fees or terms. Risk of dependency. Monthly interest payments might encourage account holders to rely too heavily on their earnings, potentially overlooking long-term savings or investment strategies. Tandem interest refers to the interest earned or charged on joint accounts held by multiple individuals. Whether tandem interest is paid monthly depends on various factors, including the type of account, the financial institution's policies, and regulatory requirements. While monthly interest payments offer advantages such as improved cash flow and faster compounding of earnings, they may also have drawbacks such as lower total interest and administrative burdens. Ultimately, the decision on whether to opt for monthly interest payments should be based on individual financial goals, preferences, and the terms offered by the financial institution. Whether you're considering opening a tandem savings account with your partner or exploring joint borrowing options, understanding how tandem interest works and its implications can help you make informed decisions about managing your finances effectively.